Is the property market turning around? Hi, my name is Alan from Alan Wee Property. Welcome back to my YouTube channel. In today's video, I'll be talking about whether the property market is turning around. Why do I say so? Well, recent events have indicated a more cautious approach both by property developers and home buyers. What are all these events that trigger such a situation? Some of you may ask me, Alan, you are very negative to paint such a picture. Others are still very bullish on the market. Some even say can buy and make money by buying the right properties regardless of market conditions. They can always remain bullish. That is their opinion and I leave it to you to judge. But for me, if you have watched my YouTube videos long enough, I am always being objective by laying down data and facts before I make my assessment. I don't anyhow agak-agak and plug numbers from the sky. I did all this through my experience on the ground, plus more than 20 years living, working and playing with property. Without further ado, let's jump straight into the discussion. Let's compare the new launch take-up rate based on reported data after the initial launch. Let's start with the Miss along Upper Bukit Timah. The Miss see a 27% take-up and an average price of 2057 PSF. Here, let us take a look from a broader perspective. There are more launches in the West in recent months. This could indirectly spread out the demand. On the other hand, Pine Tree Hill Residence is a UOL project, fared modestly at 29% during launch. Not very good in my opinion, since this is a UOL project. UOL usually has a much higher take-up rate, such as the Clairvon to Avenue South residence. The Reserve residence was exceptional to it. The strong take-up rate mainly is because of the appeal of an integrated development, near popular schools, plus direct access to the MRT station. In short, you must have a unique offering to stand out. Grand Diamond in the East also did well with a 50% sell-out during the initial public launch. Hence, you have a mixture of launches that did pretty well and others that don't do too well. Most recently, an announcement by the Ministry of Law and Singapore Land Authority regarding the removal of the commercial and residential zone from its list of land use zone. The rationale is that since commercial and residential sites are predominantly for residential use, such developments will now be deemed as residential property and regulated under the Residential Property Act, or RPA for short. This is to better reflect the intent of the RPA to safeguard residential land for Singaporeans, according to the release on 19 July 2023. In short, what does this mean? Foreign investors are not allowed to buy land that is zoned as commercial and residential site in the master plan unless approval from LDAU. This policy will impact en-bloc sites that come with commercial and residential zoning, such as Bukit Timah Plaza, Sherwood Towers, Katong Shopping Centre, 6th Avenue Centres and others. This sends a very strong message to foreigners. You can play outside with commercial properties. You can play industrial to retail properties. How you play, we don't care. But when you come back home, you better don't play resi. Wing Tai has received the contract for the acquisition of residential property Holland Tower for 76.3 million, as stated in the filing to SGX. It mentioned that certain conditions were not fulfilled and calling off the purchase has no material impact on the group net asset value. I interpret it this way: no deposit was forfeited. Certain conditions must be achieved, including securing approval from the authority to build a certain number of units, or maybe height and setback control constrained by the authority, as reported by this Age article. I also studied the development cost for the site, assuming the sales go through. The break-even cost is 2828 PSF based on Age prop. Let's add another 20% profit margin. The future selling price will be 3394 PSF. A typical one bedroom that measures 500 square feet will need to sell for a cool 1.7 million. Is this still doable in today's market? The government latest cooling measure on 27 April 2023 with addition buyer stamp duty for foreigners doubling from 30% to 60% has curbed demand. This means new launch in prime location that are targeted mainly at foreign buyers could face headwind. Pulling out of the deal could also be a blessing in disguise for Wing Tai. In my earlier video on the Jalan Tabusu GLS tender, the highest bid came from Simlian Group at 828.8 million or 1069 PSF PPR. This is 22% lower than the 1302 PSF PPR paid by CDL and MCL Land for the Tabusu Grand site. This is a 22% difference in prices. It will be interesting to see if URA award the land at such a close margin. Remember, the difference is only 0.1% or 800,000. Are there enough bidders to determine a fair market value for the land? Just a few days ago, the US Federal Reserve raised interest rate to the highest level in 22 years and left the door open for a hike in September. This means borrowing costs will go up, construction costs will go up, consumer demand will taper off with rising interest rate. Will this impact the property market going forward? In conclusion, what does all this point to? Seriously, I think it paints a very bleak picture ahead for the property market. Lower take-up rate for new launches, cooling measure on foreigners, lower land costs, developer aborted deal, and higher interest rate. If you cannot see the market movement ahead, then I will worry for you. Anyway, I could be wrong. I'm only a property agent doing Boleo YouTube for fun and entertainment. Here, is there any good buy around in the bleak property market? As usual, BTO flats are a sure win. It's even better than buying Toto. EC is the next big bet. I still think it is a calculated risk to buy an EC with a long-term horizon. Anyway, you cannot sell it after MOP. There is easily another 3 plus 5 or 8 years down the road. Property prices will usually appreciate during this period. Back to the new launch. Not all new launch can buy. Some buy already, confirm bye-bye. Some still can buy, provided the price is right. If you enter high and the market turn, be prepared to stay high, just like Ame's song, high, high into the sky. What about the resale condo? Can buy? That depends on the project and entry price. You have to do a lot of groundwork to hunt for that bargain property. It's not easy, but it is doable. My personal take, it has been extremely difficult to hunt for good properties in the last 18 months as valuation has increased across board. What about landed properties? I think they are still a good bet whether it is freehold or 99 years. They hold its value very, very well. If you think it is expensive today, tomorrow will be even higher due to the scarcity factor. So much about buying. What about selling? Well, if you think the market has peaked and you want to cash out, I think this is the best time to sell and take profit. If you have plans to sell, please let me know. I'm pretty good at selling all kinds of properties, from one-room HDB flats to condos to landed properties. Lastly, it will be interesting to see if Wing Tai upcoming new launch, the Lake Garden Residence, take-up rate this weekend. Will it be a sell-out? Will it face resistance due to the pricing? I believe many property developers are watching closely. That is all. I hope you enjoyed my video. Appreciate if you can like, share and subscribe. See you soon in my next video.